Good afternoon, everybody, and welcome to this edition of Ask the Experts for February 8. My name is Capolingua. I'm the market analyst over here at Think Markets, and it's a pleasure to be with you as we do one simple thing, and that is hand over to you. You are in control of the conversation today. Let's get into it. Over to you. We've got a bunch of questions already in the system. I'm going to start with a couple that have come from Helen on email. And the first one is Santos. Before we do that, we might just happen to be on the ASX 200 XJO. There is a little error there, but it is the XJO, trust me. So we might as well have a quick look at this. And look, the market sold me a little bit of a dummy, I think. This huge plunge, very vertical plunge through that dynamic support zone, which has been quite handy at helping us understand where pullbacks might end. And I thought maybe we'd see a bit more weakness than we have seen, and to the market's credit. And it's not a bad thing, it's a good thing. The market has powered back up to where it's starting to get a little bit serious now, isn't it, around this short-term dynamic zone and the long-term zone, which was support, now potentially acting as resistance. And I've drawn a couple of sort of red arrows where the market might start to find some supply. Now, supply points on the charts aren't supply points until you get there and you start to see the candles that indicate supplies in the system. So we should see black candles, something that in this, now imagine in this area here, we're seeing a candle that looks like, I want to find one with a nice upper shadow. I might not find an example. I'm not finding a nice upper shadow. Maybe if you can see one, scream at your screen. Don't worry, I won't hear you. Certainly if we see a black candle like that, that's not great, is it? Let's change that to red and take that off. We can see it better. So that one there. And I want to find one with an upper shadow. I'm not finding it, but if you can imagine so black candles and upper shadows in this zone, that would indicate to us that supply actually is there. And there would be more prone potentially to another pullback and a retest, maybe of around 7,000. Before we then decide whether it's a double bottom and we're back in the bull market, or it's something more sinister and we go back and break this low here. But we are in this, sort of more equilibrium market at the moment, and it is distinctly different from this demand side market over here. And we're not sure, will this end up being a supply side market at some stage? And because we're in the transition, there's a great deal of uncertainty. Let's have a look at Santos. So just to frame the overall discussion today, I think Santos looks pretty good. This one for Helen, I can see a short-term uptrend. That's encouraging. I can see the long-term uptrend is re-establishing, but it's been wobbly, hasn't it? I mean, this is the epitome of your equilibrium phase through here, isn't it? Where really demand and supply, for all intents and purposes, are equal, but we are vibrating within sort of a valuation range where brokers or the big funds believe either we're tending to be more sort of expensive at the top of that range and cheaper down the bottom of that range. We are getting closer to the top of that range, Helen, so maybe that indicates that we should be attentive potentially for signs of supply. In the last example there, I failed to find the candle with the upper shadow that would indicate that the positivity we're seeing is meeting supply, and that supply is starting to meet that demand and potentially then overwhelm that demand. So looking for signs. There's another one there, that upper shadow. That's always a concern. Didn't quite see it here. This was quite well, actually we did, didn't we? Right there, look at that. There's the upper shadow followed by the black candle. So this sort of harks back to our XJO analysis, where if we're seeing some candles like this in that key supply zone, then the market is indeed going from buy the dips to sell the rally, and that would be concerning. We're not there yet. Santos is fine. Let's see how it responds here. Would I buy it? No, it's just too close to the level where we may well see that supply. So from a risk-reward perspective, I don't think there's enough upside in it to take that risk just at this stage. But the signs are encouraging. What I can do for you, Helen, is have a very quick look at the fundamentals for Santos as well. So this is our fundamental valuation tool. And it's the data is provided by Thomson Reuters into their product called Refinitiv Icon. Hey, you can go subscribe for this. It's about $2,000 plus GST per month. So obviously it's more for institutions and brokers like Think Markets rather than your average mum and dad investor. But as you can see, populating here are many, in fact, 13 different brokers' estimates. So Morgan Stanley, Goldman Sachs, Macquarie Group, they're all in there with their various estimates for what Santos is going to do in the future. But of course then exactly what Santos has done potentially in the past as well. And from that we've got some fancy little tools in here that can give us an idea of whether Santos is bordering on more the expensive side of things or more on the cheap side of things. So the year end for Santos is December 21, so we're going to get their full year results pretty soon. If I line that up, then we start to make sense of some of these numbers. To make it all work, we need to pick a correct target PE for Santos, and if we're looking at historically, sort of pre-COVID, that's a big one there, pre-COVID, 14, 15, that's where COVID started, so I'm not sure what these are, to be honest. Santos has had all sorts of operational problems over the years, but maybe 14 or 15 is probably where it was pre-COVID, and then now we're into the sort of the 10, so we could split the difference and say maybe a target PE of 12 is probably appropriate for this one. It's going to be a little bit different for each one. In terms of their growth rate, brokers are expecting some very solid earnings per share growth in 2021, and that's bouncing back because of the huge decline in 2020, obviously due to the pandemic. Then we're expecting some good growth coming in 2022 because oil prices are high at the moment, but brokers are saying we don't believe they're going to stay that high. It's a cyclical market. We go through cycles of overshooting to the upside and then overshooting to the downside. We're probably going to see some earnings contraction for Santos in FY23 and FY24 to give us an average growth rate of 10%, which comes in here. And I don't think that's crazy, isn't it, for Santos to have a growth rate of about 10%. So it gives me a bit of confidence, I think. I think that's pretty reasonable, splitting the difference between what was pre-COVID and what's post-COVID, and then taking out some of these outliers. And that's why I have the ability to make a target, because not every stock is going to require that. And then using, I think, a pretty reasonable growth rate. And we get a fair value target of 752 for Santos, which means it's about the right value. Brokers, on average, are a little bit more bullish, I guess, with a target of around about 870. So make of that what you will. The next one for Helen, I'm sure will come up today anyway, so that's handy, is Novonix. I'll type that in. I'll let it retrieve because it might take a couple of minutes, and then we'll head over to the chart for Novonix, which is our battery technology company. They've got a process which takes just coal, very low value coal, and through their process turns it into high value graphite for battery anodes, which of course we know the EV revolution is coming. No, not making any money yet, but maybe within the next couple of years probably will be, as they're looking to ramp up production from their facilities in the US, if I'm not mistaken, but happy to for somebody to correct me on that one. So that's the general story there behind Novonix. It has been a high flyer, as of course, the markets are notorious for doing this. We go here where nobody knows about it. Maybe a few people knew about it. A lot of people forgot about it. To then everybody knows about it, and then that's kind of the point where we do see these exponential moves up. Everybody knows about the story, and then this is a good example of don't fall in love with the stock and always be attentive to the technical signs. Whenever I see something that looks as monstrous as this, you have to sit up and listen. You've got to exercise caution, and it doesn't matter why it occurred. It's just the fact that it's there, and it's just such a polar shift in the demand and supply environment for this one, putting aside all of the rhetoric and all of the talk and all of the chatting going on, of course, on the internet, and no doubt on TikTok as well. And for me, when I see something like that, my mentality goes from buying the dips really to potentially managing my exit, and just being attentive, being overly attentive for signs that things aren't the way they were pre that event. And we're seeing some moves here where some black candles are coming in. We're seeing upper shadows coming in, and we're seeing really a shift here. And this is a really key little area, isn't it, where it was threatening to move back into the hype that preceded this major event, but really failed, and then it's all been downhill from there. So short-term downtrend in place, long-term uptrend still in place. That's a tick down here, but a cross down here. Definitely lower peaks and lower troughs. The candles look pretty terrible, let's face it. The supply is in control of the market, and demand really is just getting out of the way. Demand is just saying, look, I'm not interested in taking on the risk that Novonix entails, regardless of the story. Would I hold it? No, I don't think I'd be inclined to hold a whole position here. I think, again, managing your exit means you would have been potentially exiting even the day after this, some here, and maybe even, you know, some on the breakdown through here potentially. The failure here with this area here. I'm not sure if you've got any reason to still be in it, particularly given that the peaks and troughs are so bad. If there's some hope for you, potentially it's in that the long-term uptrend is holding at this stage, but with such weak candles in that zone, it's hard to see it really get organised enough to push back up. So I don't think, I don't think you need to read between the lines there. And I hope I'm wrong, and I hope it goes straight back up for you. But again, this is less of my opinion, just reading what the market is saying. It could be a bit of a tough road for Novonix. We've had a good bounce in the market as well, and this one hasn't bounced, so that's probably another black mark against it. And it doesn't mean Novonix is a bad company. It doesn't mean that the story is not true. It just means that the market, the dynamics of demand and supply, the appetite for risk here, and the risk to take on the valuation associated with Novonix at this level compared to when it was $1 or $2, it has changed. So that is Novonix. Let's have a quick look at the fundamentals. I don't think we're going to see a great deal, actually, better than I expected. We are going to go EPS positive in FY24, and then a nice pump up from there in FY25. Let's change that to 22. We're not going to get anything. I have to go to 24. We might get a valuation here. I would say there's so much execution risk between here and that happening, I'd almost go high. That is not fair. You don't have a target PE of 12 on such an amazing growth stock, and 190 might be a bit high as well. And well, certainly 650% growth is probably unsustainable in the long run. So if I had more time, I could probably go through and massage some of these numbers, but suffice it to say, we're not going to really have a lot of faith in a number like 21.98 as our fair value target, you know. But let's leave it for there. Plenty of upside potentially, but plenty of risks as well. Let's get to Chris's questions. He wants to look at CSR, which thankfully is a well-established and very boring company. It will have lots of broker estimates and a far more sensible set of numbers here to work with. So we can go, let's go, I don't know enough about CSR really, is it, to say whether it's high, low or moderate, but I can show you what difference those ratings will make. Let's go to March 2022 to get that to match up. Let's stick with probably your dynamic forward-looking PE ratio as a target there. In the past though, you look 13, 15, the COVID impacted, coming back, you know, probably somewhere around 14 is probably not unreasonable. And given, you know, we're around about 13 afterwards, I don't think we need to change that. I think that's pretty safe. If we're looking at the broker earnings per share estimates, their growth estimates, 10%, I would argue might be a little bit on the high side for a company like CSR, but why begrudge it that? And therefore our valuation comes in saying that it's probably pretty close to fairly valued around here on that basis. You could give it a little bit more of the benefit of the doubt here and say, well, you know, we could really go 13 if we wanted to, or even 13.5, and it just starts. It really all we're doing is massaging this into really fair value, but it looks fairly valued to me on the basis of those fundamentals. Let's have a look at the chart. I'm quite curious now. Okay, well the chart I think is screaming fair value, isn't it? The chart is just screaming fair value. Unlike Santos, where we've got that really wide range. Markets are trying to understand fair value on Santos because the volatility of its underlying assets, you know, and crude is so wild. CSR, I think they're saying, well, you know, maybe it was looking cheap, sort of during the COVID shenanigans, but it's pretty fairly valued here. So, again, I'm just trying to tell you what the market's opinion is, and I would argue that for CSR, there's not a great deal going on because it's looking pretty much fairly valued. Let's take that off and just confirm here, short-term trend is down, and there is some supply coming in around that short-term trend. So we don't know it's going to be supply until we start to see signs that it is. Yeah, it's an interesting rally, isn't it? All black candles, got it back up. I can't see anything there that's getting me excited. If I owned it, I'd be questioning why I'm owning this over many other, stocks out there that with better charts. If I didn't own it, then I'm not looking to buy this one at all. Next one for Chris is Whitehaven Coal. This one looks pretty good, actually. So straight away we can see we've got a short-term uptrend. That's nice. We've got more white candles for starters. We've got a long-term trend, and we can see that the long-term trend is doing a really good job of holding things up here. This little low coming in above that trend zone. I think this all looks pretty good. If I had this one, I would be more than happy to hold it. If I didn't have it, I'd consider buying it. I mean, it looks pretty good right now. You might want to wait for it to close above $3, but look, I'm happy on the basis of what I see to be an owner of this stock, assuming I've done my analysis on everything else that's out there today, and this was the one that really appealed to me over the other ones. But of course, I'm looking at these each at a time in isolation. Let's have a look at Whitehaven Coal on the fundamentals. Whilst that's loading up, we've got Min also coming up for Chris. Then I'm going to get to John. John, no dubber today. I'm actually looking at dubber right now, doing the deep dive, and I'm going to put a research report on dubber up, if not today, certainly tomorrow. So I've got my dubber sheet here that I'm working on, and really having to fill in the blanks for FY25 based upon really my guesses and my estimates of what we're doing. And in process, you can probably see there's the article getting written right now, where I'm reviewing dubber and actually bet. Which was it you that brought that up last week, that I ended up covering for Ausbiz in their the call segment, and I really like those two stocks. I really like dubber as well, so keep an eye out for that one coming to the website. We have put away dubber. We have Whitehaven Coal numbers coming up. Plenty of brokers out there looking at this one. We've got 12 estimates. Their mean price target is $3.73, which does provide a nice whack of upside potentially, and their average rating is a buy. You can see up the top there. So up here you can see three strong buys, 7 buys and 1 hold. Looking at the numbers, let's see if we can get a valuation for my system here. PEs are crazy low, aren't they? Crazy low. What were they sort of pre-COVID? They were still low. It's just a stock that the market doesn't like and doesn't believe in. They tend to trade though. The word there, coal, is a major impediment because a lot of big fund managers just can't buy this stock because it's not within their mandate, their ESG mandates, and that does depress valuations. I don't think it's fair to maybe hold it to a 4.6. So I think I'm going to go back to target here and maybe hold it to, I'd almost go 7 or 8, to be honest, to be fair to it. And it just goes out of whack, doesn't it? $1.11. Why? It must be because of the 40%. There you go. Okay, so it's the earnings growth that the brokers. These are not my numbers. These are broker numbers. Okay, so I have to make sense of these and say, well, do I agree with it? 1,074%. I mean, these numbers are all over the place. I think you can take a lot of what we're seeing on screen with a pinch of salt. Okay, and that is fundamental analysis. It is all guesswork. I don't know enough about the company, unfortunately, to put in a different number here. So I could go target. I could go target on and say, no, that's crazy. It's not going to be, and that's just going to default 0. So if I go 0, you can see that doesn't change. But you can see even if it holds its earnings steady, it becomes crazy cheap, just if it has steady earnings. If it only sees its earnings shrink by 20%, then it becomes fair value. So this one's a bit crazy. I don't think we're going to get a sensible valuation out of this based upon the data that we've got there. Let's have a look at MineralResources, and then we'll look at the chart of MineralResources while that's loading up. Don't worry, we'll get to all the questions today. We'll go as long as it takes as a sort of a make-up for the fact that the computer has kept crashing. Touch wood. It hasn't crashed yet. MineralResources. This is tricky for me. As much as I love the stock, you can't love your stocks. You can't love it. That's okay. That's okay. When you dip like that, that's okay. That's a good dip because of that lower shadow. That makes me sad. That doesn't inspire me so much. These are good. These are very good, and this is excellent. Okay, so on balance, where does it leave us? I think it just gives us enough faith, I think, to hang in there on this one. If you've got Mineral Resources, if I had Mineral Resources, I would hang in. I think there's enough in the chart to suggest to me that this is a correction rather than the beginning of something Novonix-like. But it does raise the risks, doesn't it? It does put us on alert for potential warning signs that maybe it's worse than we think. Now, where could these warning signs occur? Where should we be paying special attention to the price action? I'd be looking at an area just under here, because really that was a sort of a key short-term support level there. And once we slipped it, it can tend to act as supply going forward. So watch out in that zone for candles that look like that one. Candles that, well, here we go. I couldn't find it on the XJO, but wow. That's exactly what you want to look at right there. That 2-candle pattern in a supply zone is often the death knell for stocks, especially after they've made a high here and had a sharp pullback. So if we saw this in here, alert, alert, danger, danger, danger. Okay, proceed with caution. Hey, I hope it never happens, and I hope we see lots more of these white candles and we just go straight through this high here without any trouble, in line with the developing long-term uptrend. Definitely enough there to hold. Is there enough to buy? It would be a highly speculative buy given the circumstances, but hey, it has pulled back into this dynamic support zone, and if you were itching to get some, then this would be the level, but you would be super attentive here. I mean, if you started to see, so let's say you got in here at whatever the price is today, right? So what's the time? 9:25. Let me do an update in the background. You might see the chart change a little bit because the latest hourly data is about to come in. So let's say we're currently at that closing price, 59.26. So let's say you bought some today at 59.26, and then it went up into this zone. It made the worst sort of supply side signal you could find. It's probably going to be about your entry price. That's not so good. By the time it gets back there, and you could, if you wanted to get in today, then you probably end up with close to a break even. At least you're getting probably a free swing at it in any case. But anyway. Let's have a quick look at the Mineral Resources fundamentals, and they are up on screen. The broker's pretty positive, but let's also acknowledge there's a couple of sells in there as well. 2 strong buys, 3 buys, 2 holds, 2 sells. Their average price target is 59.04, which actually puts it smack bang on fair value. What does my model say? Well, commodity prices, can you really put your hand on your heart and say that it deserves to be at a low risk rating? I'm not so sure, because commodity prices are volatile. Having said that, let's come back to that moderate. What do the brokers think? They think that earnings are going to fall 53% this FY, maybe because it's an iron ore miner, and the iron ore prices have pulled back a bit from their peak in FY21. So that iron ore prices have bounced back. Maybe that's a bit pessimistic, but with 40% there, 10% there, I don't think I need to adjust that. I think that's probably pretty accurate, pretty reasonable to leave in there. Target PE, it's silly to leave that at 8, so don't panic yet. What is a good target PE? Well, it was 10 last year. I think that's too low. It was much higher, leading into that, 40s, 50s. 20 is probably not unreasonable for this one. Let's go dynamic F. It's going to come into 15.4. I still think that's too low. And then we're starting to see the vagaries here of fundamental analysis, aren't we? And if I go dynamic, so that just takes all of these and say, look, what's the median? And it's probably about right, I think, isn't it, for this one? We actually get smack bang on fair value, which is not far from the brokers. So, yeah, that might be weighing a little bit maybe on Mineral Resources. It will need commodity prices to improve from here and change some of these expectations to then improve its valuation. So that was Chris. Hopefully I didn't take too long for you there, Chris. Let's have a look at John's couple today, Telstra and A2Milk. And we'll keep going. Oh, there's a long list. Better pick up the pace. Telstra. That's Talga. Oh, what disappointment. I didn't want to look at that chart today. Telstra. Looks okay. it looks better than okay. Yeah, look, you know, and hey, look, Telstra's not for you. It's not your growth stock, is it? It's your boring dividend-paying portfolio stock. It's and on that basis, I think I would happily hold it. Would I buy any Telstra here? It's probably just a bit too boring for me. But if you are a boring kind of person and you like boring stocks, it's probably okay too, isn't it? It's long-term uptrend. I like those white candles. I like all of these little 1, 2, 3, 4, 5, 6 white candles. That makes me happy. I'd buy it here for a long-term boring portfolio. The chart looks, I think, just fine. Am I worried about this? Of course, I'm worried about this. I'm a trader, I'm an investor, I'm an analyst. I'm always worried. Get it? I got asked that by Andrew Gagan on Ausbiz once. Carl, are you worried about XYZ? I'm always worried, Andrew. I'm a little bit worried about that, but it is. See, this is, I think, more about what the market did than what Telstra is doing. So I'm okay with it, or I'm more okay with it than say I would have been with, say, Novonix. Okay, let's have a look at Telstra, the most boring stock in the world, but pretty much liked by the brokers. 2 strong buys, 6 buys, 3 holds, 1 sell. Their average price target is $4.35, which actually gives it a little bit of upside, about 7.9%, and with a dividend yield of about 4%, fully franked. Total shareholder return, pretty reasonable for a boring portfolio. Now, of course, none of these things are going to make sense because we need to reset them, don't we, each time we get a new stock in. Dynamics probably right, because I'm going to bet you that the target PE for Telstra hasn't really changed a whole lot throughout history. If we want to be a little bit more forward-looking, maybe we can put that one in there. Actually, it makes it a little bit harder for Telstra to get up on a valuation basis. Earnings growth for Telstra at about 9%, I don't think is unreasonable here, but its PE is crazy high for a stock that doesn't have growth. And that's why my model says, nah, I don't like it. And brokers will have their own reasons for why they think it's worth $4.35, probably because they tend to just take what is the share price and maybe add a bit more to that if we like it and add a bit less than if we don't. But my valuation strips out all of that. I was going to put a different word in there and just says, look, based upon the growth, based upon the current valuation, this one is not attractive at all. But that's just Telstra. That doesn't mean you go sell Telstra. I think it's fine on the chart. I would definitely hold it. Might confuse a few people, but it's pretty consistent, though, I think, with some of the rhetoric that you hear in these sessions from time to time. Fundamental analysis. The beauty of a stock is in the eye of the beholder. Let's punch in John's next one, which is A2Milk. I haven't looked at this chart for a long time. I am absolutely curious to see if this is finally ready to turn around. And what I will do is I'll go to the other one we always talk about in the same breath, which is AGL. And what I drew this in November, I reckon, maybe. How about that? And I said this is what AGL would have to do. These are the barriers it would overcome. It would have to get above 732, pull back, hold it. Did it do it? Actually, yeah, pretty much. Then it would have to get above whatever this level is. I don't know, it's from an old resistance level. It would have to interact with the long-term trend zone, and it's doing that now. So it's kind of interacting with that zone. AGL, I would suggest, getting pretty close to a buy here. As crazy as that sounds, maybe even on a breakthrough 750, keep an eye on that. What's the relevance to A2Milk? There's no relevance from a fundamental perspective, but there's relevance from a technical perspective. And look at that. We did it on the same day, didn't we? This is the last time we looked at A2Milk in Ask the Experts. And we said these are the things A2Milk would have to do for it to become a buy. And has it done any of those things? No, it hasn't. So it hasn't even remotely indicated that we should buy this since the last time we looked at it back in mid to late November. Is it doing any of the things now that AGL is doing? Not really. I think the short-term trend is still pretty well entrenched. There are some interesting little candles coming in here, but is that enough to get me to want to buy? And the answer is no. And I'm quite happy to miss the first $2 or $3 on this if it does actually turn around before I buy it, because the risks, I think, are just so substantial. I just think it's such a well-entrenched downtrend that the balance of probability right now still lies on the side of it breaking through $5 and actually going even lower. I hope I'm wrong if you've got it, but I'm just telling you what the market thinks. Would I buy this one? No. Would I hold it if I did own it? No, I can't see any reason to do that right now, at the risk of selling it before it goes up. I don't know the future. I'm very sorry to disappoint you if you tuned in today, because You thought I knew the future. I'm here to tell you I don't. If I did, you would not be talking to me today. I'd be somewhere else. Okay, let's have a look at the A2Milk fundamentals, and we can see that low risk for A2Milk. I don't think so. Let's be generous and say it's a moderate risk. Dynamic F is the PE ratio, so it's trading at 40 times this year's forecast earnings, 51 times last year's earnings, coming down to 29. It's still expensive. These are still expensive. This is starting to get into the realms of believability for this one. The brokers have their earnings per share growth, and that's even with some decent growth factored in. So a rebound in earnings post their COVID disaster. I can't see any reason to increase this, that's for sure, and that doesn't bode well for the valuation. So let's give the brokers the benefit of the doubt. Leave that at 29. I'd almost hold this. I would hold this to an even harsher PE there, but let's be generous and leave that at 25.9. And this thing is, I believe, still crazily overvalued based upon my numbers. The brokers disagree. They think for some reason it's worth $6.11. And that is, you have to understand the history of the broker recommendations. And if you've been holding this stock for any period of time and been watching the recommendations, you know these targets have been absurdly wrong and pegged to the upside because brokers are slow to bring their targets down when stocks crash and admit defeat. We have 11 estimates, 2 strong buys. That's interesting. 1 buy, 5 holds, 3 sells. Make of it what you will. I could not buy that based upon the valuation from my spreadsheet. Having a look at Easton's suggestion here, he's gone for BSX, which is one that's come up many times in my scans over the last few months, and it was looking pretty darn good. I mean, until the market tanked. So if I literally go back to when the market started crashing, the XJO, that's how it looked. And that is a 10 out of 10 right there. So that is 10 out of 10 buy / if you got it, hang on to it. Unfortunately, yep, things didn't go away with just the market. So what do we do now? Look, it's not 10 out of 10 now, that's for sure. Look, it's probably still solid 7 out of 10. I don't like all the black candles we've seen. If it was, like, where are these buyers? Did they lose so much money on everything else that they're giving up on this one, or trying to take some profits on this one? I don't know. Look, it doesn't look bad because it's holding. I think it's holding well enough, but it's lost some of that upside spark. Would I hold it? I think there's enough in it to hang on to it. I'd change my mind if it started trading beneath this level here. Okay, so around that low there, and I'll give you a number in a second. So that low there is 56.5. So it's closed, sort of 56 or 55. I'd be starting to get a bit concerned, and certainly if it started to break beneath this level, it's probably over in the interim. Not to say it can't pick back up at some stage, but you might be better off doing something else with your money. To the upside, disappointing day today because it started to probe higher above this little resistance zone here. And if it could have closed above that today, I would have said, look, it's good, and we're back off to the races. And it might still do that today. I think the broader market's doing pretty well. So let's hope we get a close above this level, and I'll give it to you as well, Easton. And it is 64. So close at 64.5 or better, and I think we're starting to look very good again. So hang on to it, I would say, for now on the basis of the strength of that broader trend. I won't put it into the fundamental analyzer because I'm guessing it's kicking over rocks somewhere in a desert, and it doesn't have any earnings just yet, so the fundamental analyzer really won't have much impact. Just to read the rest of Easton's comments, and he says, completed a capital raise late last year at 58 cents. Hovering around there, isn't it? Hovering in the low 60s after a brief run into the high 70s. Nickel outlook for EV stocks looks good long term. I do think it looks good. I'm glad you bring that up. Let's have a look at the chart of nickel. And I will click update on my data provider here, because the data provider I use does give me data for nickel on the London Metals Exchange. Might not make sense there because you get an afternoon close when you get a closing price. If we've got a line chart, it makes more sense, and it does look pretty good, doesn't it? Does look pretty good. So here's that amazing close on Blackstone, isn't it? Following this increase in the nickel price. Now, obviously the market tanked. Nickel prices came back a little bit, but not that much. Nickel's heading back up, as is the market. You would think Blackstone will probably get its mojo back on that basis, Eastern. Yeah, another reason potentially to hold on to it. From King, he says, "Hi Carl, any chance of a look at HLA today? They are growing their revenue." Yep, let's have a look. HLA, Healthia, and let's go back to our default here because I need my candle. I don't want my candlesticks, I need my candlesticks. So Healthia, this is a healthcare company. They've got a range of physios, podiatries, dentistries, if I'm not mistaken. Solid company, solid earnings, doesn't look expensive. And again, before the market had its little episode, it was looking very good. I mean, again, pretty close to 10 out of 10. Markets had an episode. How's it responded? Well, it's pulled back with everything else, and often things do get baby in the bathwater. I really like these candles. It's bounced back well. It's having a little bit of an issue here, but I don't think it's anything to worry about. If we get below 190, I'm concerned, but we'll probably hang on to this level and be okay on Healthia. One interesting thing is you look at Healthia and then you compare it to the, say, XHJ, which is the healthcare sector index. So that's Healthia, healthcare stock. And you look at the healthcare sector index, it's completely collapsed, mainly because of CSL, I guess. But it does show significant outperformance. And the fact that it's holding up in the face of some of these, often the stocks get sold in the index because they're in the index. And when CSL's underperforming, the others tend to suffer. I think it's held up pretty well. Let's have a look at the fundamentals for Healthia, HLA. This is more of a long-term portfolio hold. It's not something that's a short-term trade at all. And we'll let that load up. And Matthew's asking, is BRN still a good buy? We'll get onto that next. Oops. Waiting for this to come up. I'm going to go low risk on this. Doesn't change things all that much, does it? And I'm wondering why. EPS here at 13. I can't see why that would be -5. I'd almost, I'll put Xero in. I don't think that should be -5, even if it was flat. Brokers are 2 strong buys, 1 buy. Mean target is 31% upside from current prices, so that's encouraging. But for some reason, my tool doesn't like it. Custom growth off. There we go. And I have to remember to reset it. So custom growth was set with, if there's nothing in there, it's setting at 0, but there is actually some growth in the business. So I'm pretty happy with the valuation as well. It's a little bit below the brokers, but still giving me some upside with a pretty reasonable sort of 2.5 to 3% yield expected on that one. BRN, I won't type it in here because I don't think we're going to get any earnings anytime soon on BRN. And let's have a look at the chart. I think this looks pretty good. It's been one I have been tweeting about for a considerable period of time. I'm going to say it started coming up on the scans here, and I've certainly been tweeting about it almost every day through this. Now, what do? We do have one of these Novonix style pullbacks, but it did terminate here. I wish it terminated with better candles, but this is encouraging. I guess these were pretty terrible days probably for the market. This is encouraging. I'm going to say at the moment it's probably 50-50 here, just on the basis 50-20, 50-50, just on the basis that we are sort of in this sort of halfway, aren't we? We're sort of halfway between this point and this point, and we're sort of asking the question, well, where do we go from here? And again, sorry, I can't predict the future. I wish I could, but all I can say is that the technicals are evenly divided between these black candles, white candles. Sort of looking at the price action, major extension through here. Look at that big shadow. Look how it came back from that crazy stuff. So we're into. Potentially, don't know where that's going. But you can see this contraction in peaks and troughs, and that's why I said it's sort of 50-50. We can be attentive for signs either way. So if we saw a bunch of white candles continue to come in, that would give me great confidence to hold on. We could trail our stop losses up. We'd come into here as a stop loss point to protect our profits, or at furthest away there. If it starts to break down through these levels, so if we start to see these sorts of candles coming in again, candles with upper shadows coming in this zone, then again, you might be more aggressive on your stop loss and begin to manage your exit. All right. Don't be a true believer on anything. Okay, nothing goes up forever. Question actually is BRN still a good buy? And I think from that analysis, it's hard to say if it's a good buy. I would hold it, and I'd be looking for those signals with a view potentially to managing my exit. To buy it here, I think risks are significantly elevated based upon those technicals. Okay, let's get to Marco. He's got NWE, which is one of my favourite little oil stocks at the moment. You can see why. The chart looks fantastic, and obviously oil's going gangbusters at the moment. I'd love to see this one take off and get to 5 or 6. Every reason to hold it right now. Marco, I can't see any reason why you wouldn't. There's a little bit of supply in here, but that's normal. That supply is coming in because of all the dead wood that got in probably on this run, that bought it at 3.2, 3.3, 3.4, and throughout this entire period have just been wishing it gets back there so that they can get out at break even. But I think we are seeing a little bit of a build up here. Hard to see in that volume because obviously this puts it out of scale. But we are seeing a little bit of a build up there to tell me that we're removing some of the supply. It's just going to be a process of removing the supply. Hopefully oil stays high. I think there's more in the oil chart to get us through, and then we could see a little bit of a burst from there. If we go to the weekly chart, you can see there's not a lot holding this back. It's one of the few that you really have to go back a long way before you get any resistance. We could see 8 cents. That'd be nice. Honestly, this is a pure technical pick. I haven't looked at the fundamentals for NWE. Okay, it's just I've only put that in on the basis of its chart. I'll throw it in there, see if we get anything. Ronnie's got a few here. He's got Novonix, Mincor, which is great because I've done those. He's got Pilbara, which I think we can do fairly quickly because some of these charts are going to look pretty similar. And it does look pretty similar to MineralResources. So everything I said for MineralResources, I think Ronnie just transferred onto this chart. We're at a bit of an inflection point here, aren't we? So it is 50-50. We could go either way, and you've got to decide how you want to manage your position. If you start to see it go down, do you want to just hold on for the whole way until it gets into here and then potentially bounces from here or off, some of these static support zones around 280? I'm not sure if it's worth it to keep the faith to that degree. However, if we see it close above this level here, then I would suggest we're back on again, and all is good. And hopefully it does. And that high there is 343. So closing at 344 and above, I think, is a very good sign. I'd give it enough leeway to say that if it closed beneath 304, then I'd be a bit concerned. If you're really nervous about it, below 320 would be the earlier point potentially to manage your exit. Would I buy it here? No, I can't see on just the balance of the candles just yet any reason to buy it. Above 344, I'm starting to feel more confident that this dynamic short-term trend zone is holding. But you can see the sort of candle you want to see to get the confidence back. Okay, look at the candles off this zone. So that's what you need to see to get that confidence back, to give it your full support again. IGO, same ditto, but I think this one's holding up better than Pilbara. I think it is doing a little bit better than Pilbara. I like these shadows in here. Look at this accumulation in here. I don't like this as much, these black candles here, but I think those are indicative of a market that is buying the dip on this one, and so I'm pretty comfortable with holding that one. Would I rush out and buy it? No, let's see a few more white candles come in to confirm that this is a pullback here, just a pullback. AKE, which is Allkem, that's the combination of the old Orocobre and Galaxy. I think this one's struggling compared to the last few we've seen because we've come beneath that short-term trend. This candle here is particularly disturbing because it has failed to reclaim that short-term trend, and I'd be really concerned if we broke below this level here, and I'll give you a number, Ronnie. So that number there, I think we're kind of okay on this one until we get beneath 864. So close beneath 864, I'm getting quite concerned. From Andrew, can you look at 88E? This is another one of those little specky energy stocks that I have been tweeting about from quite early. Correct me if I'm wrong, from about 3.5 cents, now at 5 cents. So that's a nice little move there. Do we need to? So this is hopefully you're starting to get your eye in here. Do we need to manage our exits on this one? Are we seeing those telling supply signals that we saw maybe on Novonix? on some of those other, almost Pilbara. I'm trying to remember some of the other ones we talked about so many today. I would say no, we're not seeing that now. So it's all systems go on this one. Can't see any reason why you'd sell it if you had it. If you didn't have it, it looks great. Looks fantastic. Yes, we're going to see a little bit of supply coming around to this level. There's a bit of a supply point there, but we won't know it's supply until we get there. And we're not really seeing any great signals in the market that the market's too worried about that just yet. But we may see some candles there that might tell us, hey, we've got a bit of a reason to pause. Could it get back to here? No idea. I don't have a crystal ball. Now, let's just read the rest of Andrew's comment there. You've mentioned them on Twitter a few times and they've had nearby companies confirm oil in their vicinity. Yep, and it's purely technical basis there, Andrew. Haven't looked at the fundamentals, but the technicals do look very good. CXO, CoreLithium, looks good, I think, better than some of the other ones. Why? This is holding pretty well, isn't it? Some nice shadows down here, much like IGO, but I think even better than IGO. I like these. I reckon that was probably a bad day in the market. I think this is pretty good, actually. Yeah, this is all disappointing. Of course this is disappointing, but nothing goes up in a straight line. And, of course, we got close to the round number there, $1, where people just say, I'm going to cash in, for no other reason than it's $1. This is very encouraging. If I had it, 100% I'm a holder. If I don't have it, it's not bad. Close above this level here, that high there, 82.5, so closing 83 or better, that's starting to look pretty good again for CXO. It's holding this static support pretty well. Dynamics look good, short term, long term. Can't see any reason why you would sell that and or not back it to the upside. Hey, you've given it a fair bit, haven't you? I mean, it was 20 cents not that long ago. But let's see it close at 84, did I say, or better? First, that is for Hamid. For Joseph, ARR and XRO, ARR. Oh, American Rare Earths, yeah, okay. Looks good. Can't see any reason to sell it just yet. The candles here and here are pretty encouraging. The fact that we had this massive buy day and really in a pretty awful market, a fairly limited pullback. This is all still good. This is all still good. Yeah, none of those really awful supply side signals just yet. Yeah, this isn't. Obviously, that's not a great candle, but it's come back pretty well from that, I think, with rising troughs. And 50 cents, of course, people are going to sell at 50 cents. Why? Because a few days ago they bought it at 25 or 20 and they've doubled their money, so it's a no-brainer for some people. But I'd happily hold that one. I think that looks pretty good. XRO, whizzing through these at the moment, obviously to get to the bottom of our list because we are approaching 1 hour of our session today. Look, beaten up in the tech sell-off, no doubt. So high PE stock. How high is the PE on XRO? Well, this is probably the first one in a while we're going to get some numbers on, so let's punch that in. If you want to look at the fundamentals for IGO and some of those other ones, we'll have to do that another day. Let's let that load up. From a technical perspective, it doesn't look great. No, short-term downtrend, long-term trend about to change. There is some encouragement coming from the fact that I think that's a pretty nice reversal. I reckon we probably saw some decent volume coming in on that day, so that's encouraging. And it's all skewed by some volume back here. So if I just zoom a little bit, we're going to get the volume just reset the scale. So I want to see on that spike there a positive day, which is great, and then I want to see a little bit of a recovery here on far less volume, and we are seeing that. So that tells me that the supply that was nagging the market, it's probably out of the market, and we're potentially in a bit of a supply vacuum. Demand is coming in, and maybe we can get a bit of a rally here. Just on the technicals, there's enough there to hold it for now, but I'd be super attentive as to how it responds in this zone here. And if we start to see some of those telltale bearish candles come in there, something that looks like that black candle with the upper shadow, something that looks horrible like that in this zone, then it would give me cause to rethink my hold strategy. It's not a buy because there's just too much skewing to the downside here. So it's a hold on the basis that this low is encouraging, but super attentive as to what happens in that area there. That's for Joseph. AGL from Matthew, we've done that one. We did that one. If you didn't catch it, Matthew was tuned in late, just catch the recording. AZJ for a different John here. hold on, AZJ, Aurizon, not bad. I don't mind these candles coming in here. They're actually pretty good, actually, aren't they? Lots of nice white candles. We're at a zone. It's kind of that reversal play that we talked about with AGL, with A2Milk potentially, where we do need to interact with the downtrend zone and then break above it. I think this is quite highly prospective for doing so, and potentially we could see a move into 390 or even 420. Okay, but given the overall trend is a bit ugly, it's not one for me. It's not something I would be prepared to take a risk on or recommend that clients put fresh money into, because let's face it, 370 to 420, that's not all that exciting, is it? Let's try and find something that's at 370 that might go to $8 or $10 or whatever it is. But on the basis that if you had it and you want to get more out of it, you probably will. Okay, let's have a quick look at the Xero fundamentals, and I'm just curious on this one because this one's always very polarizing. Look, at 2 strong buys, 4 buys, 3 holds, 3 sells. That is as polarizing as you can get. The mean price target is 140, which is now, because it's tanked, providing a bit of upside there in the share price. Let's find where the earnings are going to occur. EPS here 4.6, so March 22. That's what I need to do. To March 22 on that one. Broker estimates for growth, well, 848% is not bad for FY23, and then moderating through there. It's a bit high to be believed to be anything that's sustainable. Let's go moderate here because it is a high risk, high PE stock. I wouldn't be prepared to pay 204 times for any high growth stock, and even if I was absolutely crazily generous and said I'd be prepared to pay 100 times for that. And then let's go on here, and again, take a guess. I don't know. What's the average of those two? 100. So it's at 349. That's silly. That's not going to keep going. It's at 100. There you go. Could be. I think what we're seeing here is that you have to make so many guesses on the valuation that it's impossible to value. Maybe that's why it's so polarizing. So make of that what you will. I can't give you a reasonable fair value for Xero. Don't take any notice of my figures. The spreadsheet is broken. Xero has broken the spreadsheet, and I suspect, looking at some of these, it's broken a few other brokers' spreadsheets as well. FMG, this one should be, actually this one's going to be just as hard to look at because of some of these growth estimates in here that we're about to see. Okay, let's have a quick look at the FMG chart while we're here and while that's loading up. I think this one looks really good. Hopefully just in this session you've tuned your eye in enough to know that these things are all working out pretty well. What's really valuable here is to see, because we're at this point on many other stocks, aren't we, where we've had that sharp pullback into the short-term uptrend zone. We're seeing some not so nice candles, but there's some encouraging signs as well. And where do we go from here? So just some nice white candles just get you back on the right track. And I can't see any reason why you would sell Fortescue. I think you need to hold on to it. And if you didn't have it, I can't see any reason why you wouldn't maybe buy a few, because the yield is something stupid at this point in time. So it gives you a bit of a buffer on the capital loss, gain or loss side of things as well. Having a look at this, again, we're going to see brokers just being totally pessimistic about iron ore pricing, expecting 22% fall next year, and then 21%, then 4%. And maybe they're going to be surprised. Let's say we just need to change this back to June 22, and let's do that. Not do that, let's do this. And let's leave it at moderate because it's a commodity stock, right? So it is subject to the cycle, right? And let's go F and then remove that. And I reckon that based upon a target PE of 13, which is not unreasonable. These are when it was sort of getting into production, but not unreasonable at 13. 4 silly, 9 silly. But if you're looking at these ones, which makes sense, these are because of the huge boom in iron ore prices. I think that's pretty reasonable. I think the market might be surprised by their earnings resilience, and therefore maybe there's some upside in Fortescue. Brokers don't agree with me. Hugely, wow, look at that. Hugely polarising stock. Hey, how about this, everyone? How about this? Fortescue is one of the few stocks that's going up right now, but the brokers hate it. What does that tell you about these big brokers and their recommendations? Because someone must be buying Fortescue right now. It's going up, right? Yet they're telling clients potentially to sell it, or at least they're telling us. Anyway. Okay. Thanks, Chris. MCR, if time allows, from Hamid. Let's make this the last one. So a few people are going to miss out. This is the last one. Obviously, we're getting short on time. And it's a good one to do, MCR. It's one of those nickel plays. And again, a similar chart. We're seeing lots of this, aren't we? So I'm just going to go ditto. What's encouraging is some of these candles. They're really encouraging that this is just market related and not necessarily related towards the broader sentiment towards the stock. We obviously need to see levels here hold. Look, if I had it, absolutely I would hold it. To buy it, it's taking a bit more of a leap of faith because we are still dealing with the uncertainty that this creates. And that gets back to the very start of our conversation today, which is the index and the uncertainty in the index and how that just permeates through even what were some of the best stocks prior to that correction that we've had. And I wish I could give you more clarity, but I don't have it. If there's time at the end, says Chris, and no more questions, I would love a quick view on Insignia. Sorry, Chris, can't do that. We'll take that on notice for next time. Easton says, thanks a lot, Carl. You're a star. Okay, not sure about that, but I will take the compliment. Thanks. Ronnie asking for PLS, which we've done, AKE, and IGO. Fantastic, we've done those. CNQ, any good? Facebook, and then we've got a few, I could almost do them all today and then have a clear conscience. CNQ. Any good is the question from Matthew. CNQ, any good? Answer, no. Facebook, let's go to Facebook, which you're going to see the chart of Bitcoin appear in a second. That's because to get the Facebook, I have to go to TradingView and type in FB. Of course, it's not Facebook, is it? It's Meta. And we have a look, and it wasn't in great shape, was it? And you can see here how technical analysis can give you, great warning that things aren't as they should be. And the fact we actually broke down through this zone, look how important this zone is, and then this final telling tale here where we resisted it and we couldn't get through it straight back down. Would I buy Facebook here? I can't see any reason to buy here because we're still printing ugly black candles. Until we see some white candles come in, we won't know where the bottom is. You could see the bottom around this level here around 207 because there's a bit of a support level there, and failing that, it's quite a way down to the next support level. Let's have a look at the weekly chart. And yeah, so we're actually moving through the weekly straight through, slice straight through. Black candles closing on lows. This candle is still live, of course, because it's only Tuesday. Not a great sign. Where's the next support level around here? 157. So I said 207 was a potential. That level is kind of disappearing a little bit. Maybe it's that low there. It is there. That low there. So that low there as a potential support point. But you would still need to see the candles come in first before you try to scoop this one up. And I can't see why you would. And then 137. What candles do we need to see? Candles that look like this. Long lower shadows and then white candles following up. So if you saw this sort of a pattern somewhere around here, you might be paying a bit more than where the low is, but at least you can have more confidence that potentially we are making a low. If it does happen sort of in this zone, then that could be constructive, but it's very much a pass for me right now. So the question was, is Facebook a good short-term buy? I can't see it. I can't see it on the charts. I'm at the bottom of the questions. We're done for the day. Well, I'll be back next week on Tuesday at 12 p.m. because we have moved Ask the Experts to weekly based upon demand. That's where you can register. Of course, you're automatically registered if you're listening to me today in the live recording, but if you're listening to me on YouTube, that's how you do it. Why Think Markets? Well, with over 4,100 shares and ETFs tradable on our platform at $8 flat rate for your CHESS-sponsored holdings. If CHESS-sponsored is important to you, that is that you actually own your own shares, this is where you've got to be. 24/7 customer support, world-class trading app. If you are watching on YouTube, please hit the subscribe button to get notified of my next video, and make sure you hit the thumbs up to let us know that what we're doing is something you like. That's it for me today. It has been an absolute pleasure chatting stocks with you. All the best for your trading and investing. Till we catch up again. Bye-bye for now.